Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, December 12th. Michael Boutros here with you this morning. Carlos, Iman, Christopher, Mark, Pete, Pooja, Ziad. Great to see everyone in the room. So, upcoming into a major week of event risk with the obviously, the U.S. CPI numbers will be on tap tomorrow morning, so we'll cover that together here at 8:30, guys. But then we have the Fed interest rate decision, the quarterly projections. We'll go over those. I was going to leave that till tomorrow, if that's okay with everyone in the room. We'll go over the dot plot from the last quarterly projections, what to look for, any shifts in the expectations for whether we'll get 3 hikes or 4 hikes. Markets are still pricing 1 or 2, so certainly there's still a lot of room there for that spread to push around dollar price action. So we'll go over the implications of that tomorrow, but we also have the ECB, the BOE, lots of stuff to talk about, guys. So on the list for today, obviously DXY, quick review of where we're standing there. Aussie dollar, still my favorite setup for now. Dollar yen, Kiwi dollar, and dollar CAD, still holding that resistance level, interestingly enough, that slope that we added on earlier in the week. So look at the loonie. Pound Oz, also interesting setup from last night. Worked pretty well in overnight trade, coming down even lower. We'll look at the gold prices, which are sitting at support as we speak. 1240 is pretty big, guys, to line the sand for me. There's really a $40 gap to the downside if we move lower from here. So big level on gold. Other setups, we'll go over pound, dollar, euro, and interestingly enough, a nice move in euro Oz, mostly on the Oz strength, but we'll take a look at that as well. Any pairs you didn't see here mentioned or setups you'd like to look at, feel free at any time throw them on the message board, guys, anytime throughout the session. All right. So let's jump right in. Here's what the dollar index looks like, or here's what it looked like, I guess, last night, and then here's what it looks like now. At the end of the day, we're looking for some sort of reaction, some sort of some sort of teeter high in the range of 94.14 to 94.27. My humble opinion is sort of still the butter zone to look for. Former swing lows, former swing highs, 618 retracement and decline, and the 1618 extension of the ascent. All of it stacked up in this zone. We're not really stressing this median line formation near term off the lows, but seems to be offering some guidance for price. So I have it in there for reference. But at the end of the day, we're still looking for sort of an exhaustion high or evidence of one to give us a little bit more of a conviction play for the downside in the dollar. Implications are more heavier for the euro, obviously, but obviously with the FOMC interest rate decision on tap, expect a lot of volatility. Okay, Pooja says, quick look at CAD yen, please. Yeah, sure. Did I miss that in the webinar yesterday? I'm not sure if I got to that for you, Pooja. Was that you who asked about it? We'll take a look at CAD yen. Gotcha. So, that's the game plan. If you look at the previous update on the dollar index from earlier in the month, here's what the daily chart looks like. Here's what it looks like right now. No difference, okay? It's either got to be a concerted break back below 93.50, more specifically 93.30, the 100-day moving average, or kind of spike into this region for an exhaustion near term, okay? That's still the game plan. Here's what it looks like on the near-term charts. Okay, bring it into the 120 even, get a deeper look at what we've been doing since the start of the week. Not surprising at all, okay, ahead of FOMC to see this kind of price action. But on whole, heading into the FOMC, if we were to get some sort of exhaustion press all the way into resistance, look for exhaustion. If we get a break to the downside, don't go chasing just yet. Look for the recovery and then try to sell some sort of rebound in price for a move lower. But the focus is still on this near-term range, and you're heading into some major event risk in the dollar. So rev up your engines, put on your safety belts, put on your helmets, the whole 9 yards. Stuff's about to get real interesting for the dollar. Again, we'll go over the Fed stuff tomorrow. Any questions here on the index before we move off? Iman says, and please Kiwi yen. Kiwi yen. I got you. New Zealand, JPY for Iman. Okay. Next up on tap is Aussie, and this is my favorite play. As I guys told you yesterday, I'm actually still holding along from last weekend, or last week, ahead of the weekend. I brought my stops in a little bit. I was thinking about taking some off here earlier in the session as we were heading in the highs. We're about 50 pips in the money at this point. But I just love the level that we turned from. So I don't want to get too greedy on this trade. Calling turns, guys, is never, it's always a fool's errand. There's nothing to stop this from going for another stab into this key support before rebounding again, so I don't want to kind of fizzle it off. So I'll look to see how the U.S. markets open, but it looks like we made it through the monthly open right here, and I do like the larger rebound back towards, basic parallel resistance is sort of where I'd start to shave a little off. Like I said, my stops are break even. I'm not going to take a loss on it, but I kind of want to see if we can juice this one a little bit. The level of which from which we turned in Aussie is so critical, guys. It's really, really as basic as simple slope support off the 2016 lows. Okay, right there. So 74.76 allotted us a little bit lower of a drop before we start to get concerned. That's the basic 50% retracement of the entire advance from that from last year's low. So, ideally, as it was going into NFPs, I was kind of looking for a one last drop into that region. We didn't get it, right? We didn't get it. So kind of no guts, no glory on this one. I just kind of wanted to be in the position. The major resistance level, even when you look at this from a lateral standpoint on the weekly charts here, is still 76.30. It's up here. So you have the 38.2, the 618 of the near-term advance. They got the 52-week moving average right there. Okay, there's so much loaded up there. Former slope support, former slope resistance, again, should be resistance, right in this region. So that's the major resistance we need to get through. Is it worth it on this near-term advance that I'm in to try to play it to that level? Maybe not, but I think it's worth leaving a little on the table. So if we start to get some kickback here today, back below 75.50, I'd start to get a little bit concerned. Maybe start to shave off some of that position. Again, we'll take a break-even stop if it goes all the way lower, but looking for just in the initial tag of the median line, again, 76.30 is the big region that we need to clear. We looked at the weekly chart. Same thing here. Monthly opening range highs is 76.50. So objective break above that region, and you're just straight up bullish. That's just a reversal pattern all day long. All right, you got some divergence into that low with a price action making a lower low, the oscillator making a higher low, albeit very slightly, but both of these reference levels within the 70-30 region is a pretty decent signal. So I'm willing to stick with this one for a while, okay? Again, I was kind of trying to look at this from a real near-term approach. This is the 120-minute chart, obviously. Go even deeper. Just to kind of get an idea of what some near-term targets could be. And you can see that the 100 kind of broke through too, and that's why I was willing to let this sit on the table for a little bit. The 1618 comes in just higher from where we petered out. Be a nice objective target too, but you try to give some color to it throughout the course of the advance. You try to develop what price action is saying, and every time I tried to draw something this morning to kind of just give myself some reference, it looks like it made that stretch. So I don't want to kind of stay in front of it and cut it too short. If it gets back below 75.50, it'd be worth it just to book some profits to get a little bit more off the table, take a more protective stance on it. But well, I guess I'll leave that on for now. But as it stands, still looks pretty good. Still looks pretty good. Questions on Aussie dollar? 75 and the 74.76 is still critical support from every standpoint, from every time frame that you look at. It's just a critical support region. So that's what the focus is to start the month, and that's what the focus will remain here on Aussie. Okay, next up is dollar yen. This will be number 3. Here's what Yenski looks like. So the abomination is something that we took a look at earlier in the week. Here's what we were looking at. There's really nothing to update on this chart at all, except the fact that we're still holding this 113.24, 113.90 range of price action. That's really what the focus is for dollar yen. Here's what it looks like on the, I guess I'll show you the daily charts first. So we've wrestled back and forth with whether this median line formation is in play or not. We talked about the fact that some parallels off that really gave us a perfect touch of all the highs that we made from September on. A slope or a parallel of that same slope extended off the low there almost caught the highs here. So your question is, does this advance constitute a full-on reversal and continuation of the broader uptrend, or is this just a rebound within a larger correction lower first? You know, try to take it out to basics. Here's the weekly chart, dollar yen. You guys all know how I feel about the abomination. Hey, D, good morning. Great to see you in the room. At the end of the day, we're in a simple range still, okay? Still. We had a pretty nice weekly reversal here, which turned our focus lower earlier in November. That was the only thing that was actually sort of a nice conviction play for the Aussie, for the dollar yen short, rather. But we were only targeting this region here, which was the overlap of the longer-term 200-week and 52-week moving averages. We settled below that. Here we pop back above. I don't know what to do here. The focus is on this region. It's pretty much that simple. And when you look at this in the weekly chart, again, it's not a very convincing trade on either side of it. Okay, so heading into the FOMC, dollar yen, typically a very strong reactor to U.S. Event risk, whether it's major economic releases or specifically Fed policy outlook, because of obviously the debt and the correlation that dollar yen has to some of the treasuries here. So at the end of the day, a strong dollar reaction or a sudden move, the burden of evidence is on a break and a weekly close above 114.30. If that happens, there's tons of upside potential. More likely than not, the scenario I would favor would be sort of dollar strength and then an exhaustion, sort of like the peaks that we made here for the last 3 times that we tried to attempt a breach above 114. And then if we get that failure, that would be a decent pullback play as well. Okay, I'm putting a neutral stance here on dollar yen, guys. Just so you know, I'm not a real big fan of this trade to begin with. So at the end of the day, I want to caution you. But what the technicals say or what the technicals say. Same thing here. You're coming in some near-term resistance. 114.29 again is just an objective 618 retracement of the range, the yearly range. And if we were to get that stab higher, that's the burden of proof, is to close above that region. Subsequent levels on such a scenario, topside targets are pretty clear. Look at this even closer time frame. Looks like this. Here's the charts that we were following. Let's start off the week on Sunday. We highlighted 113.90. We highlighted 113.24. Look for a break of this near-term region. If we break lower, again, 1247 is going to be our near-term bullish invalidation level. So certainly a break below that lower parallel, below those former swing lows, would open up the larger decline. Even back to former slope resistance would take you all the way down towards 110.80. Or if we do get the break higher, this is that key region, 114.30, 114.50, of which if you were to find some sort of exhaustion high in the dollar, I think would be a nice play. So those are the levels for the dollar yen, guys. No conviction here on immediate play, but very clear levels, I think, as far as near-term price action of what we should be looking for heading into CPI release is tomorrow morning, guys, ahead of, like I said, we'll cover that here in the webinar, ahead of the FOMC. But, it's really unlikely that you'll see a major move tomorrow for CPI unless there's a major miss. You figure that the Fed kind of has that baked in already. In their upcoming projections. Not to mention that the Fed's preferred gauge of CPI, guys, or of inflation rather, is still the core PCE, the personal consumption expenditure. So CPI kind of take with a grain of salt, but still, the headline figure should catch market's attention. All right, so still looking for decisive action here in dollar yen. It's either a push higher before it fades, or if we break below 1324, if you get a decent opportunity try to catch that short, move into basic slope support, you know, I wouldn't be too opposed to such a play. But I think as far as dollar yen is concerned, at least for me, guys, it's kind of just let's see how it happens, how it pans out with the FOMC. There's other opportunities, I think, more pressing at the moment. All right, so that's dollar yen. Next up on tap is Kiwi dollar. Here's number 4. So we got the favorite scenario. As we were talking about this on the Sunday Open, you know, we were talking about the fact that we were once again testing 68.27. We've talked about this region ad nauseum. It's 2016 Open. It's a major pivot in price. It's also remained sort of a key support structure that we've been waiting for the close below to really validate a massive drop in Kiwi. Now, to close out the week, let me bring this to the daily chart. You know, we posted a reversal day right here and kind of canceled it out and closed just above the monthly open. So we were unable to make it through the monthly open and again back through 68.28. Kind of left the focus, the risk for a move higher. And even if you look at this on the near-term charts, you know, once we kind of probed that last time to close out November, every subsequent drop into that key support, momentum was pretty much holding the 40 region. So you think to yourself, all right, well, you're at a key support level. We've obviously made some pretty serious rebounds. Looking back at price action on the daily chart, you know, obviously it's a critical level, and it really leaves the consolidation pattern. The risk is for a rebound higher, and the focus was on this near-term consolidation, right? And this is where we opened the week. So we got the move into resistance, near-term bearish invalidation level 69.36. We've pushed through that. And now we're checking it as support. If we hold this support into the U.S. Open, you look higher, 69.66 and 70. Sort of big targets on the daily chart even leaves room for a further upside move into that region right here. And that's just the median line of the broader formation off last year's high. So an objective break of the monthly opening range, possible. You know, you didn't get too many tests, but I'm willing to take it on merit if it does close at these regions, and that would give us a little bit more of an upside bias. Again, the divergence that we saw into the lows, the trigger break that we saw in momentum, while we didn't see price action give us anything, that same support or resistance trigger started to offer support, and again suggested that the downside momentum is really starting to wane. So, you know, here's what the chart looks like now. As far as the levels are concerned, no change to any of the levels. We were basically trading right here. We've broken through this, and we're now checking it as support. Final test. Weakness below 74 would spell disaster. That's not the favorite scenario. So again, that's still the case, guys. Okay, the favorite scenario is still to the upside. We're not favoring the downside break just yet. But this does hold true though. If it breaks 67.40. That's down here. If we breaks here, we go neutral. If it breaks 67.40, it's finito. Okay, there's tons of room. This thing could collapse, you know, into 65 and change before anyone bats an eyelid. But as it stands right now, the key support is 68.28. Near-term focus is higher. You'd look for resistance, initial targets at 69.66, just a basic 236. But it's really 70 that's the major area that you'd expect to see a little bit more. Whoops, a little bit more of a resistance hold. So let's see if this Kiwi advance can't stretch a little bit higher. Looks pretty decent. One other thing that you could sort of take into account, a conservative measured move, and I say conservative because you could measure it from the widest part of the formation, but if I were to take a conservative measured move here of this consolidation pattern break, it gives you a measured movement to 71. Now, if you look to the left, and I'm just doing this as a drill, guys. I like to do this a lot, kind of give myself some reference, and always try to keep things as objective as I can. If you look to the left, let me get rid of that, 88.6. If you look to the left here, okay, where does that 71.06 or 01 level converge on? Boom. It's the 618 retracement. Whoops, I'm lying. Just below it, 77, 618 retracement of the entire decline. But up there you have the 200-day moving average. And you have former swing highs, nice pivot in price, 70, 90. So this region, you know, that's the emphasis, if we were to break on a move beyond 70, you still have basically another reign for another 100 pip rally before you run into any major resistance. Don't think it necessarily gets that high. We'll have to reassess it, once we get there. But the immediate stance right now, the immediate focus is on support, the former range highs here, with a stretch near 69.66, near 70, looking for a little bit more of an exhaustion pullback. Questions on Kiwi? Yeah, and you're pretty spent on Kiwi data this week as well, actually. So really look for the dollar to drive price action here. All right. Moving right along. Kiwi dollar, it's going once, going twice. Here's the 120s to give you a quick look. And again, no change to any of those levels from Sunday's update. Last but not least from that same update was dollar CAD. And here's what dollar CAD looked like to start the week. And I'm always contentious. Again, I'm never going to be an advocate of trying to pinpoint a high per se, but I just wanted to highlight that we were opening the week near resistance. Okay, 128.57 is where we were when we wrote this. 129.27 on the weekly charts highlighted the 50% retracement of the entire yearly range. Pretty objective, right? It was also swing highs that caught the exact high that we made back here on the previous advance. You had slope 50 line there, right, which hadn't been, invalidated on the weekly close basis yet. And key supports down here. Okay, you have basic slope support that we've been following off the 2012 lows. You have the long-term 200-week moving average. So you have a very clear-cut range as you head deeper into the December open. Daily chart looked like this. Again, to start the week, you were coming right into the high day close from October. Also, the this month's, the December open was right there as well, 28.86. And you had basic slope resistance, basic trendline resistance. Remember, these purple slopes are all derived from just these 2 points that we made in the May advance of this year. Basic slope resistance caught here, and again, it was encroaching on that rally right here. Now, when you took a look at price action on the near-term front, this pitchfork kind of came into view. You don't have too much emphasis on it. The things that were working in our favor were the fact that the median line itself was a pretty decent gradient. Again, you don't want to see price action. You want to see reaction there, either a whipsaw, a reversal, or when it does break, you want to see acceleration. So you saw some resistance, the break saw acceleration. And again, even though we broke it twice on both accounts, there was acceleration on both sides. This is what kind of made me a little bit more interesting, kind of turned me on a little bit, right? You got a lower parallel there, literally catching the low. And then we were opening the week on Sunday. The Friday high was right there at the upper parallel. So the idea was, look, guys, you have that 28.86 region we just talked about on the daily chart. You have 29.27, which shows up on the weekly charts. So these are your key resistance that you want to see hold, basically. Stops against this region, what have you. And you're looking for a break below this 28. Where is it? Let's go to the live chart, I guess. 28.05 level is what you need to see as sort of a near-term break of support. Right? And that's what would put us on our way for a little bit more of a conviction stance to the downside. So the only thing that's been very impressive is that the upper parallel, literally, on the weekly open, held to the pip. Look at that. Before moving lower. So again, another opportunity, a short exposure against Friday's high was in play here, and you look for targets into 128. Now, you're getting a little indecision here. Momentum hasn't really gathered pace to the downside. You didn't have much of a trigger to get in. So you want to play this one close to the chest, but the levels, the idea, okay, remains unchanged. The one thing I don't like is from a basic, a look at this kind of a first gunshot look from an Elliott 1, 2, 3, 4, 5. Does look like a 5-wave impulse. So you'd think this is corrective before next move higher. Not my favorite scenario, just to put it out there. I'm looking for this to move lower against these highs that we just made. But at the end of the day, if we break 28.86 and specifically 29.27, you have to look higher. As for me, right now, my favorite move is against this high. Okay, and a break below 128, a break below the 50 line, the objective swing that we just kind of tagged there, you'd look for a drop into the median line. Obviously, this will be variable based on time. And also, if we do get that break, guys, a quick scenario you'll want to do for near-term guys is we'll want to tack on a quick retracement here. I can't do this now because I don't know that this is a high. I don't have no proof. There's no burden of proof here that this is a high. Once we break that swing low from Friday, that starts to put this at least in action. And you'd bring up a basic retracement to see where you get some convergences. Lo and behold, the 618 retracement, if that high were to remain in place, converges right on that median line near 27.20. Okay, so that's how I would look to play this. If it does develop, that we do get a break below 128, that's how I'd look to play that. If we make a new high, obviously that invalidates the play. Specifically above 28.80, I'll go neutral. But if we break the range highs, you're looking at 130.26. Daily chart has much more room to the upside to go. All right. Questions on the loonie? Interesting play. Let's look for a break of this range between 128 128.86. Favored moves for a downside break, but it's a low conviction trade. We'll see how it pans out. Again, I'll have that break even on that one, so I don't have to worry about it at this point. Okay, let's take a segue back into. Iman has a question here. It says, heading into big event risk, usually market gives us random price action. What is your advice, Michael? Stay neutral, close our trades if we have, or just trade normally? So no. There's a couple of things I always recommend, guys. If you're uncomfortable with any specific, first of all, you want to lower all your trade leverage in general during this time period. Personally, I'm kind of a little heavy on that Aussie trade, but that's just because I've been waiting for that level for literally like 6 months. So, like I said, no guts, no glory on that one. I kind of just need to go with my gut on it. But at the end of the day, yes, you want to lower your trade size, Eman. And on low conviction trades or trades where you're kind of sitting mid-range, like, for example, dollar yen right now, you want to use the event risk to help you get entries. I wouldn't be looking to front run the position per se. Now, Eman, if you're holding a position, I'm of the mindset of you don't want to let these events shake you out. If you're in that position and you're in the money and you're a little bit over more leverage than you'd like, definitely reduce your leverage. Fidget with your stops, bring your stops up a little bit more to more key levels. Make sure you have your downside protected. But I wouldn't necessarily shake you out of a position. Okay? If you're not in a position and you're looking for new opportunities, heck yeah. You want to be very, very picky and choosy. You want to lower your leverage. And you want to stick to your guns. I'm always a big advocate, especially if you're newer to the markets or if you're newer to near-term strategies. During this time period, use it as a learning experience. Seriously, just watch price action. Take a light position here or there. But these event risks like the FOMC are not, NFP, stronger, weaker than expected, boom, get the market reaction. These are very tricky sometimes because the devil's in the details. Sometimes while the statement might not offer much clarity, there's a mess up in something that she says, or she slips up, or something comes out. Now, the one thing that we all need to keep in mind heading into tomorrow is that this is Janet Yellen's final release or final FOMC policy meeting as chair. She's going to be stepping down. Jerome Powell will be taking the helm starting next year. So, while you don't want to discredit anything she's saying, we have to keep in mind that we will be under new guidance, or we'll have a new, captain at the helm, as it were, starting next year. So it's going to be interesting to see how this plays out. The markets are priced in for 25 basis points. That's priced. The markets should not offer a reaction tomorrow based on the hike. It's all going to be based on the projections and what monetary policy outlook looks moving forward into 2018. Okay, we're basically got 100% priced in for this 25 basis point hike tomorrow. All right, Eman. So I hope that offers a little clarity. But yeah, it's a good time to be nimble. So that's dollar CAD. Next up is pound Aussie. I just wanted to touch base on this real quick. I kind of covered it again last night because we were looking at this last week, but we were on the long side for a while, if you recall. Okay, here's pound Oz from last night. And, you know, all through last week on this rally, we were looking for an inevitable move, basically ideally into that 180 handle, 180.05. We just tapped, just turned ahead of it. I think the high was like 3 pips shy before turning around. Now, a look at this from different time frames suggested that this was kind of very toppy here. And not just that, you also have the fact that we're looking for the Aussie long. Well, the Aussie long would certainly put downside pressure on pound Aussie, right? So inherently for me, it started to look a little bit of a different picture starting the week. Excuse me. So I was looking for a drop here into 176, and this is where it's more of a decision time, in my opinion. You have former swing highs, you have a basic 38.2 retracement, you have a basic trendline support, 3-point touch off the lows. So that's sort of the break that would really shift the focus for a move down into 73.46, and you got almost 250 pip move to the downside there of room. Also, a near-term bounce would give you a better entry if you're not already short, if you didn't get to play that downside move. Here's what it looks like on the daily chart, and a further highlight of why 76, even at 75.60, kind of a tricky region. This is the high day reversal close from back here, because there's a lot there. Again, here's the daily chart. Basic median line coming off the lows. Basic 38.2 retracement of the decline from May of last year. Basic high day close, like I said, from the high day close reversal that we made back in May as well. So a break below this region, and again, there's room into 73.46, 73.50, just on an objective approach. Looking at this at the daily chart, why did we turn bearish? Well, you had a high day reversal. Okay, it wasn't outside day, but it was a high day reversal. Momentum, that's a pretty strong momentum divergence. Price action making a higher high, the oscillator making a lower high, one of the reference points outside the overbought condition, one of them inside the overbought condition. 4-point trigger break, 1, 2, 3, 4 touches of support. That broke, and we closed below there on Monday. So, you know, everything from all standpoints, you know, gives you the indication that you kind of want to be looking lower. Now, you want to curb your downside expectation right here into the 76 handle. Near term, this is the burden of proof. Again, to break below this is to give us the reversal pattern here in pound Oz. You guys know that the longer term, broader picture for me on pound is still kind of constructive, although near term, I don't really like what it's doing. So this is a good way to kind of play a little bit of the pound weakness while being able to still, you know, favor our Aussie strength. Immediately, you're at support at 76. So I want to see how the market opens here. If we rally, again, look for immediate resistance near that slope line, but more importantly, 77.93 again. And a break to the downside. Basically, you're looking for that drop into November open, 73.46, 73.50, based on where that median line comes into play. But the level's pretty clean. I kind of just wanted to give you an update on this last night because it looked pretty heavy. So all that happened was we dropped from here to here. Look for reaction right here. Questions on pound Aussie? Obviously got the BOE on tap later this week. Should put this one in play. Okay, that's number 6. Okay, last but not least from last night is gold. Look, we're at a big level. I don't know if it holds. I kind of hope it does. 1240 was a region that we've been talking about for months. There's a whole bunch of Fibonacci considerations there, you know, from the weekly charts ongoing into the daily charts. You have the 50% retracement of the entire advance off last year's low. You have the 618 extension from the decline off this year's high. You have some slope lines. They all converge right here. Now, you know, if we break 1240, there's really nothing until 1210. 1209, and that's a conservative measured run, to be honest with you. I think there's plenty of room beyond that, even if it breaks. But here's what it looks like right now. Okay, again, I'll take you to the weekly charts first. So the 50, the 618, there's that region. Just lower, you do have the longer running 200-week moving average. That converges also on slope down near 1232, but you know, we're like splitting hairs here. Basically, if it breaks this region, look at momentum. We're testing the lows for the low that we made here previously this year in July. You know, if we break, we break. Okay, and it's not going to be pretty. So 1232, yeah, sure, could see a near-term target there. A historical look back at the 200-week moving average. Yeah, you've seen price action react on the accelerations, but you know, there's days where we've kind of probed through and come back. So not a moving average that I'll definitely, you know, put all my emphasis on. But for me, 1240 is big. 1240 is big. Okay, if that breaks, we're in trouble. So I'm looking for signs that we're going to hold. You know, I'm not willing to take a stance on this one. This is not like the Aussie trade where it's worth it to kind of just want to be long. I want to see some sort of reaction here. I want to see some divergence start to pan out, and you are getting it on the near-term charts. It's just nothing that's worth, in my humble opinion, trying to fight just yet. So I just wanted to highlight this 1240 level. Keep your eyes on it. If it closes the day below, like I said, the risk is really there for an accelerated move down near 1230, a soft target, but then 1210. If we hold, you know, your major resistance is still hidden up until 1263, 1267. So there's room here. This would be the favorite scenario if the dollar comes off resistance. So again, take a look at the DXY. If we were to probe into that resistance and come off, you know, on the FOMC or something, that might be the last-ditch effort to push gold into one final low, you know, before starting to mount a little bit more of a sizable recovery to the upside. Okay, at the end of the day, it's a down. You know, the pressure is still on the downside, guys. Remember, basic support that's held since August. Boom, 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 boom. You expect to see a pretty decent sizable move to the downside. So the pressure's on the downside, and you know, the fight, the side of most resistance, you know, the side of least resistance to the downside, the most resistance would be for us to see a reversal here. But that's something we need to see more evidence for before trying to even attack from a trading standpoint. Questions on gold. All right, so let's see if we can't see this downside pressure start to fizzle out, get a little bit more conviction of trying to play here a bounce. That is gold number 7. Okay, so really quick, let's go over, we're good on time. We'll go over pound, euro, Aussie, and then we'll jump into your questions. I have a question here from Pujan CAD yen, Kiwi yen for Emen. D saying, can we look at euro Kiwi? It's breaking 69.30. Okay, euro. Okay, I'll throw that after euro Oz. Sure. Let me get through this real quick. So, wouldn't be remiss if I didn't talk about the pound. I'm not really interested in trading the pound at this point, guys. I know Jamie's got you guys covered on the swing side of things, so I'll leave it to him. But you know, for me, it's kind of tricky here. I don't really know how to attack it. Look, the levels remain unchanged. So if you go to the swing update, certainly the last time we talked about, or I guess here's the pound trades. Last time we talked about the pound was right ahead of the FOMs or NFPs rather last week, and none of the levels are changed. We basically went into high day close right here. We surged right through this before reversing sharply. So we're right back at support, 133.20. You know, I still have 32.80 is sort of my line in the sand. I want to see price hold above that. That's the November open. 32.26 would put us straight bearish. You know, if we get, you know, that last stab in the dollar higher, maybe this drives lower and you look to fade a drop into one of these levels. I don't know where this goes from here, guys. I'm not going to try to, you know, art something up. It's unclear to me. It's either, you know, the ideal move would either be a drop into this region for a long exposure, or just a blow through 20 or 35.40. You get conviction for that topside move near 38. Right here is tricky. You got a lot of range highs. You have a couple of different Fibonacci considerations taken into account. You have the objective monthly opening range low. So what do you do in this region ahead of event risk from both sides? You have the FOMC interest rate decision followed right back to back with the BOE. So certainly it's going to be a very interesting 48 hours moving forward here for pound dollar. I'd rather be looking for another low to fade. I do think that the immediate pressure or the immediate focus is still for a move lower. You take a look at the momentum signature. You had a decent 3-point trigger here. That broke yesterday. Friday was actually a reversal candle right off the monthly open. Again, something that typically shifts your focus lower when you look at it objectively. And within the confines of the decline, let's just say this is going to make an equal sort of correction play. The thing that kind of scares me is that 100% extension, okay, takes you down here, down to 32.89. So everything you look at kind of still says you might be heading lower before you head higher. So take this one, be cautious here. I think this is kind of like dollar yen. You kind of want to wait it out and see how we go through these next 48 hours with both sides of event risk. Gunshot approach, if you take a pistol and put it to my head, I'd say look for a low to buy near one of these two levels. A break above 34.95. The emphasis is on a close above that. We've been talking about that region for a while. If we do close above that high day close, you look for continuation. 35.40, 35.86. Would just be the initial near-term targets on the upside, but there's tons of room in such a scenario if we do break above this. Near-term emphasis, I still think the risk is for another move lower. Any questions here on pound? That's number 8. Number 9, euro. Can't believe it's all the way down at number 9, but it is. So here's euro. Again, one of those trades where looking for a similar scenario as I am in pound, I guess. I still think euro, as we talked about last week, the focus, the risk still remains for that move lower. I don't know if you see 116.78, guys, but taking a look at this again back from the weekly charts, he kind of broke some stuff. He kind of broke some stuff with this move yesterday or last week. The 2015 high still doesn't even come in until, what is that, 117.14? So you still look for a little bit of a drift lower. There's that, critical area, 116.16. There's a 200-week moving average. Pretty big deal. It converges right on. Former swing highs is from 2016. It still would leave it for a move lower, basically at risk. Right, so the weekly chart, nothing really super constructive here, right? You could see a scenario moves lower. Daily charts, well, similar type of scenario. You turn from a pretty big level here. There's the move lower. That was our line in the sand last week, 117.90. We closed below it, tried to break through again on yesterday, pushed lower. You look for that drop near 116.78. Would be a basic 236 of the entire yearly range. But euro hasn't really been on the menu for me in a while. The crosses have been much more interesting than euro dollar. And I'll show you euro Aussie in a moment. That's the one that was a little bit more interesting for me. Here's what the intraday chart looks like. And here's the last chart that we updated here on the intradays for euro. Well, it was the NFP print, right? Here's euro. So I've since removed this slope. This is, it's basically off this high. We broke through. We came right back and touched it, and it looked like we probed right back through it last night. So I kind of removed it off the charts. But keep the lateral levels in focus. This is what kept our focus lower starting into NFPs last week, right? We had broken below 118.05, and we had checked it as resistance for a couple of hours before a big old outside reversal candle off that resistance pushed us even lower. Okay, that's this right here. So the focus just remains lower below 118, simple, plain. The initial target was for a move into the median line here. We kind of got that. Post NFPs, here we are again, right there. And again, 117.09 is your next downside target. And that's the 618 retracement of the advance. So I do think Aussie still has or Euro rather, still has a little further to go on the downside before all is said and done. Again, would correspond pretty nicely with the DXY heading a little higher. So Those look clean at least. How to play it from a trading standpoint, um, well, the only opportunity was actually try to fade this rally last night against that high for a short. I didn't take it. Again, I have a couple of Aussie crosses in place, so I didn't want to get involved here, but look for a move or a break below last Friday's low to drop into that 1709 just to complete a basic 618 retracement of the advance. Give me a sec here. All right, I'd be willing to work with that. Let me clean this up a bit. Oh, see, that would put the 50 line right here, right along with the 618, 1709, and the upper 50 line, which capped it here at 618 extension. That's 118.46. So levels are clear on both ends. You stay bearish below 118. Eventually, you're looking for that drop into 117.09. I think that's a level you have to keep in mind. So I know it's not the cleanest chart, guys. A little messy here, but any questions on the euro? So Euro Aussie is the one that I favored, and this is the one that was a little bit more interesting for me, and that's just based on the structure of where we were. So here's where we were to start the week. You add these median lines, guys, the median line parallels within the confines of the pitchfork. You look for the 618 to offer something interesting. You look for the 50 and the 75 line to offer something interesting. But what you're basically focused on is the slope. And I kind of just tacked this on the basic slope line here. Even if it doesn't match, if you just move it, you can see those two highs are essentially right on point. So I'm willing just to kind of work with this for now. This was sort of the initial target that you look for is the median line. We've since broken through, so I'm interested to see how this pans out. But on a type of reversal play, if Aussie's gonna mount a little bit more of a mountable or a sizable play to the upside here with what Euro is doing, we just talked about that's update, and there's room to the downside there into the 117 handle for Euro. I think this has more juice to the downside near 154. 154.55 is the initial upside, or the top of that support range. Even an extension of the decline gives you the 100% right there. So even if this is just correctionary, you still see a move into 154. All right, so an interesting setup there that I haven't really been talking to you guys about here per se in the webinars, but I thought it was worth just bringing it up today because of what we're seeing in the Aussie. Even near-term approach of a pitchfork just off the highs, the exact median line converges. Hell, look at that, same exact region. Nice touch on the upslope here. So a couple of different indications we should continue to look lower, at least near term here in Euro Aussie. The basic focus support range is at the 154 handle. Obviously, I'm sure some of you will start to look at this and say, hey, there's a head and shoulders here, and it very well may be, but we wouldn't even be looking at a head and shoulders measured move until we see a break of 154 anyway, 154.55 to be exact. So let's not get too excited on that beforehand, but as it stands right now, that's kind of the idea I'm working with here with Euro Aus. Looking at it on the weekly chart, or on the daily charts rather, you also see a little bit more of a conviction pullback on the fact that you saw really strong building divergence on all three of these reference points from here. Higher high and a close, higher high and a close, higher high and a close, series of equal highs. We're under 70 in momentum. Gives you indication, again, the momentum signature looks a little tired. And I'm not sure why this got deleted. But something like that, something you want to look at too, is sort of a near-term trigger if it closes there today. Either way, even on the daily approach, 54, nice. Nice area of support. Questions here on Euro Aus. If you don't like Euro dollar, if you don't like Aussie dollar, here's a nice cross that might be pretty interesting if you want to stay at a dollar event risk altogether. this is a nice alternative for you. So last but not least is Euro Kiwi. Did someone ask about that? Yeah, D. I might as well stick with the Euros together. So here's Euro Kiwi. I haven't looked at it, so let's take a look at it together. I can tell you right now, it looks like we're at support. So what did you say? It's breaking 169.30. And I'm short at 170.25. Nice. Booked half at 169.35. And now running balance at stop 70.20. Would be helpful to see your target. So I love it. D, love the 69.30 target. I love that you did something there. It was the May high. It's the median line. It might be probing lower, but it's a good region of which you'd start to look for a little bit more of a concern. Momentum here got a little bit more room before 40. Let's take a look at this a little bit closer. Hmm. Okay. So this is going to make the chart a little messy, but let me explain it real quick. A basic retracement, you always wait for some sort of conviction turn, some sort of tell that there is a high in place before you look for the retracement. The first thing I'll do is just look for the basic 236. If markets pull back and there's a vacuum, all else holding still, what's the first target you inherently just start to look for? Well, 236 is usually something like that. Now, I would typically remove these 618s, the longer term retracements, but this 618 calls into focus a high right here in September, and this 618 calls into focus a high that we made right here in May. So both of them represent levels of just sheer, objective highs. So I'll leave those in play. But below here, levels I would look at just as reference, okay, where you might want to do something else. 67.85 would be that basic 236. And then the swing highs converge right on the 50 line for the slope of the upslope that we've been watching. That's down here at 166.89. So from the daily approach, the two levels I'd be looking at as far as the subsequent downside targets. If we break beyond this region, you are at near-term support. You're right at the median line. Okay, look at this on near term. Let's look at the 240-minute chart. Well, looks like I highlighted this to someone earlier. Might have been you last week, D. There's 69.50, 69.30. We obviously had that as a target. There's the median line for the near-term uptrend. Actually, I'm sorry. Once you snap these levels, it'll change. Give this a second. There we go. So we're already breaking below that level. That's why we had that convergence there. Okay, there's the median line that we're talking about. So let's see how this pans out. If we open the US session, it continues lower. Let me bring in that 236 target. And then 66, yeah. So the level's pretty clear. Now, for you, specifically, you want to look what today's close looks like, D, because if this breaks below here, remember the downside break of a descending channel formation or descending pitchfork formation, typically, sometimes, more than not, will be the sharpest part of the move. So you could really see this thing start to pick up pace if we close below here. Watch this region today. Your stop at 70.25, so right ahead of your 5 pip inside, right? Okay. This is the monthly open from last month. Yeah, looks like it looks decent. In fact, if this pushes deeper here into US trade D and you get somewhere near 68.50, I'd be comfortable bringing my stop down even closer. Bring it just below the 170 handle or even just above 169.50 up here. As long as we stay below that median line, below the 50 line, you'd look for a continuation lower near 67.85, but this is pretty big here. This is pretty big. Yep, you got it. Cheers, D. Hope that helps. Okay, that is Euro Kiwi. Next up on tap was Pooja's request on CAD Yen. Let's take a look at CAD Yen. Hey, more than welcome, D. Hmm. Yeah, so Pooja, I mean, I'm kind of looking for some CAD strength to start to materialize, but I don't really want to be short yen per se. If anything, I'd be looking for a reaction up here. Looks like we talked about this earlier, near 88.90 and change. You have the 100-day moving average, slope resistance, and whatnot just above there. On the intraday charts, it doesn't, it's not really screaming anything out for me as far as a relative position near term. So here's the weekly open. Let me just see if there's something a little bit more near term pressing that gives us a little more structure. Hmm. Yeah, she's ugly. Pooja, she's ugly. Is there something specific you're trying to do with this? Let me know. Um, put a gun to my head again. I would say look for a move higher to fade, but I'm not really a big fan um, of trying to play yen weakness per se right now. I mean, I do think dollar yen travels higher. I think that's dollar driving real quick before it moves. As far as CAD yen, yeah, I'd still say I'd look for kind of one last stab before it turn. What is Pooja saying? Looking for a short? Yeah, that's the idea. If you again a gunshot approach, Pooja, that would be my idea. I'd be looking for a short, but closer near 88.93. If you look at this objectively, kind of like the high day close for the month is still right dead on with that 100-day moving average. So like 88.70, okay, into 88.93, this region here. Sure. But I'm going to tell you right now, just as my humble opinion, not the cleanest setup. Not the cleanest setup. If anything, this did break a multi-year downtrend here, turned us crazy bullish. But the pullback that we got here was deeper than I thought it would be, at least. So maybe the correction has one last stab to make into this basic trendline support off the 2016 lows before you actually start to move higher again. Long and short of it, my focus would be against this region. Make sense, Pooja? And last but not least, Kiwi Yen here for Eman. This will be number 13 on the session. Here's what Kiwi Yen looks like. And if I recall, we have been following this one, right? So this thing broke basic resistance, and it's bullish all day long. The basic focus on this one I know we've been following it here. So many trades, so little. There it is, 12.6. So, the basic emphasis on this trade that we've been talking about for so long was the nature of which it was coming into this resistance barrier here. Every single touch of this, upper median line parallel for the descending pitchfork saw a little meander, slam lower, a little meander, slam lower, a little meander. You did get the slam lower into channel support, but that held. As soon as this thing ripped through 77.77, that was our bearish invalidation level. As soon as it ripped through that high, automatically, boom, you start to look higher. Initial target 78.21. That got taken out. Next major topside target is still up here. I'd stretch that range from about 79.30 into 79.40. You have the 50% objective retracement of the decline off the September highs. You have the 200-day moving average. You have the 100-day moving average, all converging in this region. Okay, that's a big break. That's a big break. Certainly yesterday was the conviction close that we needed above to confirm it. So it looks higher. Momentum also had a 3-point trigger break right there, which gave out on that same advance. Here's what it looks like on the intraday charts. Here's what it looked like last week. So again, there's that support. Got that hold right at trend line support or channel support. Once we broke 77, sayonara. Okay? 79.42, next big side target to the upside. And that's right here. That's just a 50% retracement, like I said, and the former swing highs for the November open, or the November high in general. Here's your November open. So an objective range high, the 50% retrace of the advance, nice pivot in price. Look at former range highs back here as well. And again, a break to the upside of an ascending pattern, typically your sharpest part of the move, and you're seeing that right now. So Kiwi Yen looks pretty good. This is for Iman, right? Iman, did you have any specific questions on this? Could see a little teeter out or a pullback here. I'd stay constructive above 78, looking for a stretch in 79.42, still the major next upside target there. So target's unchanged from that report. Initially, we were favoring a downside move, if you remember, to start the week, right? Or this was, when was this? Last week, when we were coming into this. We were looking for a break of this range right here. And we favored a downside break. At the end of the day, Friday, we were closing still within that same range. So to come into this week, it was the same focus, 76.90 into 77. Really, that's the level that we need to look for the break. The rest is history. All right, hey, you're more than welcome, says True. Thank you so much. Hey, you're more than welcome, Amen. All right, guys, I'm over on time. We'll go ahead and wrap it up here. Again, look forward to seeing you all tomorrow for the FOMC preview, and we'll go over live CPI numbers that are coming out at 8:30 as well. Till then, things are going to start getting weird, okay? A little thin trading as we head into Asia tonight, guys, ahead of the FOMC. So if things start to die out from a volatility standpoint, don't be too surprised. Just make sure that we're positioned. We kind of have everything set up for tomorrow, and we'll get a nice review of that right ahead of the release. So till then, best of luck trading, and I will see you tomorrow. Cheers.